Okay, so very quickly, I'm looking at this candle here. Why am I looking at this candle? Because it broke. So let me zoom this for you. So I'm looking at this candle here. This candle broke the previous candle's wick on the high, and there is an order flow shift change, right? So you can confirm that structure is sort of shifting to the bullish side. This entry right here, that the one that I took right now, is strictly based on supply and demand. And where you can see this now, this was the supply, price reacted from here. Price then went up and then it reacted from here. There are no wicks. Price came down. Where am I entering? I'm entering if my bias is bullish. So I want to enter at the breakout of this, and I will place the low at this, anticipating that this is a strong low. You could cover this as well. It's up to you. It's a 5.8 pip then, but I'm anticipating that this strong stays if this high gets broken. Because if this high gets broken, then I'm assuming momentum will break this high, which will make this a strong low. If this low goes, my entire bias changes because now price is going downwards, right? My entire trade narrative changes, and that is where the entry was. This is where the entry was, which is what I was looking at. I placed it right at the bottom of this 4.6. It gave me a 1.5. The price did not push enough before it came down and broke me even right here, right? So my back testing tells me 1 hour break even gives me the maximum edge on this. So that trade is gone. And let me remove this so you understand which candle am I next trading. So the next candle. So once this trade is gone, I got break even, right? It could happen, or I don't get an entry, let's say within the first 5-10 minutes of the following candle. I just put a timer. I put a timer for the next 16 minutes or 15 minutes, not 16 minutes, for the remaining portion of that second 15-minute candle to finish, so I can come back and see what it's doing now. I'm not staring at the charts all the time. So the next candle finishes printing, which is this big candle. It's a bullish candle with that large wick on the top, right? And I drew a circle around it. Fantastic. I did not see any liquidity taken. So clearly the zone were what? The zone was this, because this was a pullback for me. Yes, it got clearly smashed. So the minute the zone is smashed, I'm done with it. Then it is where this would be the last zone, right? So this would be the zone that I'm looking at. Now, price clearly reacted from it. There is no strong liquidity in this price action, nothing. So next I'm looking at is supply and demand. So I marked this portion of the wick, and then I marked this portion of the supply, the body, the inside bar, right? I could have done the higher part because this part is what is unmitigated. This from here, top, not from here, sorry, this, there. So let me zoom this and let me explain this to you. The goal of the wicks, or the goal of every candle, the way the price moves, is that it is mitigating something in the previous candle. It is always doing this. If it has not mitigated anything, price will always come back to mitigate this, either move away or completely run that area over. There is no reason that the price would otherwise react from this. Something is in his candle right here that is giving you that reaction. This wick has already mitigated this part. So if I were to zoom in, this top wick of this bearish candle has mitigated this part in that inside bar, the area within the wick. But from the top of this wick and the rest of the candle, nothing has mitigated. Something is there and it has not been mitigated, which is why price is pushing up to this top area to get a reaction from. So price gave me a reaction and it came back into exactly this wick. Why this wick? Because there is an order block in here. There is a zone in here. It's highly predictable the way price moves. If you know what to look for within the supply and demand battle, you will figure this out, that price is extremely predictable. Price came down and I had already drawn this. I knew it's going to react from this. If it does not react from this, price is going downwards, or at least it would have given me a buy to sell over here. So a buy, and then it would have given me another candle and it would have taken over. And that buy to sell would have become my new zone, a new supply zone, right? But in this case, price came in and it gave me a good solid reaction. Two ways I could have entered. There was an order flow change, so it broke the top of the previous candle. I could have entered at the breakout of this, or I could have entered at the failed reaction of this supply zone, right? Because this high has to be strong if it were to put a new lower low. It did not put a new lower low, it's weak, so I'm anticipating the price to get run. With that anticipation, I placed an entry, and this was, if I were behind, so this is where my original thing was. It was a clear a 2R trade. Now, depending on your brokers, you might have hit your TP or not, but it was a good run, and it was a logical run between the battle of these two guys, right? Okay. And I believe that was the last trade that I saw in here. There was nothing left. The next thing what I did was I looked at this arrow indecision bearish candle close. Large wick to the top side, large wick to the bottom side. And I had some liquidity that I saw over here because this high broke this low and then it got swept. And I did not get any reaction or any entry before I hit the zone. And in this case, I could have easily taken a short over here, place it to the high or cover the entire zone. The entire zone is what, 4.1 pip? Oh well. And this would have been a nice 2-hour trade. Textbook trade. There is nothing in this that I am talking which I don't talk on a daily basis in my Discord or on my markups. Textbook entry. You have this candle. I don't care about the structure on 15 minutes. All I'm doing is that does it create a structure shift on my 1 minute candle? How does it? So let me get rid of this. How does it create a 1 minute structure shift? So you have your high, you have your low, you have this internal pushing up. This was the strong low that created the new high, which got run. So my immediate trend is now the smaller internal downwards. I don't care about these large swings because that large swing, if I'm waiting for this, my day is already over. And I'm not interested in sitting in front of my computer for hours and hours and hours. So I'm looking at this broken, this broken, this broken, price is shifting. I'm looking for an entry. My entry is what? I got liquidation. This is my zone. I got a mitigation. I put the stop, sell stop order at the bottom of this wick. If I were to capture this at the top, it's a 2.1 pip stop loss. I'm not going to do that. And the whole zone is about 4.1. That is a very nice stop loss size. And that was a strong bearish push. Easy trade. Yeah. And that was it, guys. London and New York. Question to you. Is there anything that you would want me to address? Anything that is confusing to you right now? It'll come. Don't worry. If you're seeing this for the first time, the more you see and get your eyes used to seeing those entry patterns, where those zones are, where those liquidities are, it will come to you. Nothing is impossible, I promise you, for sure. You just have to put in the right amount of work in there. Which one, sir? Isaac. The candle also doesn't break previous 15-minute candle low. Where are we talking about? Which candle? Sorry, I guess both of you guys are asking the same thing. Michael, I will ask from you. Why did you choose that prime candle? The candle had no body close. You're talking about this candle right here? The indecision candle, bearish close? Okay, good question. Yes, we did not have anything on the bearish close side. This was an indecision candle. And why did I choose this? What I will typically do is when I am looking at this, I have how many candles within the 2 hour? I have 15 candles, right? Every candle I am putting a box. As one gets printed, I will put my box around this, irrespective of what is happening on the chart, right? Once I put the box around it, then I'm looking at the structure. What is the structure telling me, right, on the 1 minute? Because sometimes what happens is that even if you break the high of the previous candle, the structure on the 1 minute doesn't change. The price goes up and then it comes back down. So if there is a high here, so I have to show you on this here, but I'll find it and I will post it on the channel, and I'll tag you, Michael. But what happens is that once I put this square on this indecision candle, which is this. Let me get rid of this one here. That is the candle, right? This part has not been printed yet. So let me replay and cut this out. So this is where 31. So this is the first print that I'm doing here, right? This right here, this candle has not been printed. So this is the information I have. So what is it telling me? It is telling me that my price, the internal structure is bullish. It is still bullish, yes, because this is pushed down all the way. You can see the wicks are not breaking to the top, but the wicks, again, this broke to the top, but then it pushed down and pushed down. These are inside bars, but it is clear structure, right? There is no strong pullback and push down. Then price is doing clear structure and pulling up again, right? At this point in time, what do I notice? You have your structure breaks here. That is one. That is another. Right there. Yeah, you have two structure breaks. For me, that is telling me first indication that the price is ready to move downwards. And if I were to now, these two, right? If I were to go to 15 seconds, look at this. It's much more clear, right? So this was, I was telling you, this is your large push up. This is your large push down. This is really small compared. So look at this price action versus look at this price action, right? So for me, this is down. And then we have started making these smaller internal trends upwards. Once this low gets broken, this low gets broken, this low gets broken, I'm thinking, hey guy, the price is trending downwards. This is it. I want to get involved. The liquidity was taken, right? So this high broke this low, and then it got immediately swept in. Liquidity got taken. And once price tapped into that zone, into this zone, I placed a stop order at the top of at the bottom of the thing, a sell stop order at the bottom. That's it right there. Now, what you could have done, now this is even more advanced. You could have taken an entry at this candle here or this candle here as well, because now these are reaction candles. Every chart is the same. The reaction candle on a 15-second chart is the same as the 1-minute chart. Your zones are a little finer, a little smaller. Your stop losses are much more smaller, but you don't have to go into 15 seconds. The only reason that I would peep into this is when I'm trying to explain a point, or I'm trying to understand the bias on how the candles are forming on the 1-minute time frame. All right, guys, I think I have a rundown timer again. 10 minutes. It was a long session. You're talking about these two candles, guy? Isaac? So this candle right here? Okay, that's a good candle. I mean, I had it marked also. This candle is a good candle. I had it marked as well. Before time runs out, I'm looking at the time as well. Let's do this. Let me play this out. Okay. Tell me, where do we have liquidity? Liquidity would be at this high point because it broke the low and then it got swept. Liquidity would be, these are equal lows, but this low broke this high and it got swept with the same candle. The problem is that once liquidity gets taken out over here, this part, exactly, Isaac, thank you. Once that gets taken out, if I get an entry, which means that a low of a candle is broken, by an entry meaning that we're always doing a sell stop, right, entry. If I get an entry before I mitigate any zone, this liquidity for me is not valid anymore. So once price hits over here, before it hits, I'm waiting for another set of liquidity to happen. So if I consider this liquidity, this would be the clear zone, yes, buy to sell zone, or I could push it to the wick part. That's where the order supply is. It went into this, right? Here, I could have easily put a short order at the breakout of this and cover the top. That would have been a 2.7. I'll push that up to a 3. This is the liquidity that I would consider taken out, and that would have been the trade. Easy trade. There is nothing new that I presented here. It's everything: mitigation, liquidation, entry at the sell stop. That's it. Clear, Isaac? And then obviously I don't, once it's done, it's done. I don't look at other more candles here. Very good, guys. I'm running short on time again. I will figure this out. I'll probably get Microsoft Teams or something. But I don't want everybody to just drop off now. Thank you for joining me. It was a long session, but I hope you guys got some value out of this. What I'll do next is I will take the 2 sessions and I will put them all together, and I will upload it on Vimeo for everybody else to have a look, or maybe if you want to revisit this again. All right, guys, you'll have a good time. Cheers, man. Bye-bye.